Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains volatile, demonstrating significant weakness even though its counterparty, the US dollar index, the USDXY, plummeted from 104.40 to 103.10 following a much weaker than expected jobs report for July, which has stoked fears of a potential recession in the US. According to the US Labor Department, the American jobs report showed significantly in July, with the non-farm payrolls adding just 114,000 jobs on a seasonally adjusted basis. This was well below the forecast of 176,000 and decreased from the 179,000 jobs added in the previous month. Meanwhile, the unemployment rate rose to 4.3% in July, up from 4.1% in June, marking its highest level since October 2021. Combined with the weak manufacturing and construction data, the slowing economy in the US raises concerns about the Fed rate adjustment. Following the US job report, expectations for a 50% base point rate cut at the September meeting has now significantly increased. Meanwhile, looking to this week, the Reserve Bank of Australia is expected to maintain its cash rate at the 12-year high of 4.35%. Additionally, the RBA Governor, Michelle Bullock, will give a speech in Sydney on Thursday, where audience questions are anticipated. Turning to the technicals, as the market declines, we can see that the MACD and the RSI is showing significant bullish divergence and therefore could snap to the upside. So any down challenges towards the level of 64.75.85 could be rejected. And if so, could see a move up towards the level of 65.45 and maybe on towards 65.70.75 and reassess. The euro dollar surged on Friday as the US dollar plummeted from 104.40 to 103.10 and now puts on the map the 110 figure 10 target, which I've been calling now for some time. The technicals have strengthened up, therefore any pullback is likely to be shallow, with the support seen at 108.40.50. As we turn to the weeklies on the Japanese yen, we can see the market has significantly fallen, 10 big figures in over a week and 17 big figures in 5. Along with that, with extreme oversold conditions on the weekly and on the daily, could see a correction soon. But that being said, still allow room towards the bottom side of this range, given the break of 148.15.55 has put a trajectory down to 142 figure 60. Nevertheless, as mentioned with the RSI oversold on the daily and the weekly, I do expect to see eventually a snap to the upside. The British pound rebounded on Friday as the dollar plummeted and now looks towards 128.10.15. That could lead to 128.60 and reassess from there, as we would need to see a break there to support the case further onto 130 to 131. At the base holding around 126.30, there is a lot of room to the downside that could still give much volatility, and therefore traders should closely monitor signals and adjust their risk management strategies accordingly. But to support the bullish case, we would need to see these technicals firm up a little bit to the bullish case, as the ADX is still supporting a bear trend. On Friday, spot gold experienced significant volatility, challenging the top side at 2,476.80, which was rejected. But from the candlestick, has broadened the range from 2,400 to 2,500 this week. However, from the whipsaw price action, traders should continue to monitor signals and adjust their risk management, as the market will likely experience whipsaw price action as it attempts to re-establish its bullish trend. But overall, with the support holding at 2,400, I do anticipate that eventually the market could reach its top side into uncharted territory around 2,500 and reassess from there. Wrapping up with oil, the market took out the support level of 74.70 and now exposes the region of $71 a barrel, and a crucial or major level at 68.70 to 69.10. But given the bullish divergence here, I do anticipate the market to recover. And if we do see a break above 74.10.15, could ignite the move on to $75 a barrel and reassess. Well, that's a wrap. Thank you for joining me, and as always, look out for intraday report, and I hope you enjoy the great start to the new week.